Welcome everyone to the Traders Market Intelligence Report brought to you by WBHQ.com. This update is for Tuesday, not Monday. Monday's a market holiday. Tuesday, February 22nd, 2023. Hope you're all having a great day, man. It was an interesting one, that is for sure. We're going to check out the market in just a minute. Want to look at the VIX first? What happened? We got a gap up on the VIX and a nice pullback. Right? So the S&P we'll check in a second now. But overall, we're still in a really solid place on the VIX, 1992. But, you need to look at this, okay? I feel like, it seems like the VIX correlation to the market is off. It's broken. Something's not right. And what I mean by that is, right now, you'll see the market going up and the VIX go up. Market going down and the VIX go down. There's no correlation, which should be an inverse relationship. And it's off, right? So yesterday we had this huge spike to the upside. We're down on the S&P today, and yet we're down on the VIX, right? So overall, we're in a very good place VIX-wise. Now, options pricing still seems higher to me than it should be. And I know that, but when I look at covered calls, when you do Covered Call Explorer and diagonal spreads, diagonal put spreads are insane as far as the cost to enter that credit spread into that credit position. They're ridiculous, right? So let's go take a look at the S&P 500 and see where the S&P is right now and how we finished up for the day. SPX. All right, that's not it. We need the dollar sign first. It's a mo better. Okay. So again, we had this bigger overall bearish downtrend taking place. We're out of that pattern right now. We broke out here quickly. Back in December and Jan, actually both December, we broke out here in January, and we pushed up to the 4181. We failed, and we're back. Now, as we really hone in on what's going on there, folks, we had to push up to the 4181, close right near it. We stretched a little bit higher, right to where that fib line is drawn from, of course. The nice pullback to the 236. There is our hesitation level. We get a strong bounce. But we put in a slightly lower high in there. We put in a low here before that bounce, and we put in a lower low here. We put in another high, but it's lower high. And yesterday, Thursday, we come down below the 8 moving average. We close right between the 8 and the 21. There's a lot of concern as we sit there. When I say concern, traders looking at this saying, all right, is this the pivot point right now? We gapped down today to the 21 moving average, which was what I had said yesterday in an update I did for one of our advanced groups that we teach, that we train here, Wealth Builders. And we looked at this and said, okay, we are in a very critical position. If we can maintain above the 21, we're okay. If we violate the 21 and or put in a lower low, the violator of the 21 was on the close. If we did, we barely got below it today. Let's see, 40.79.11 is closing price on the S&P, and we're looking at 40.77.36. Now we are slightly above that 21 moving average, and if I really stretch this this chart out, you can see that we closed above, right? I'm only doing that so you can look at today's candle, just because it's such a small bodied candle. So we closed above the 21, but our wick broke down and gave us a lower low. So now it looks like we're putting in that bearish trending pattern to the downside, right? Taking the train, baby, straight down. So I don't know if we're going down or not from here. We could get a bounce and we put in new highs again, and that's great. But we are closed in a barely bullish neutral bias on the S&P 500. Everything is pushing to the downside. There's concern now with the economic numbers between CPI, PPI, retail sales, all going the wrong direction for what the Fed should be looking at. Right? We'll see where it all straightens out and where it goes and how it all lays down. But for right now, what I'm looking at next week on the S&P is this. If we can maintain above that 21, which is the green line, the green moving average, I'm looking up to the 8, the pink moving average. Right? We've got to get above there to get any kind of bullishness back in. If we break that 21 and start to push down, we're looking at that next fib level as our next stopping point, which is 40.31 right down in here. Right? So there you have it. There are your marching orders. All right? So here's what I want to say. Right? Focus on the chart. Do not step away and think that, well, this is bearish now, or it's just short term, it's going to come back. Don't make that decision. Let the chart make the decision for you. Let the chart be your guide as to where it goes. With that, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it, and remember, you're just one trade away. Take care, everybody. Have a great weekend, and I will see you back on Tuesday. Bye for now.